Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Bob, welcome back to the show.
Yeah, Friday together with you and our listening audience. Hey, I always enjoy it.
Well, we have a rather extensive first question from one of our listeners. Do you expect inflation to come down significantly before the end of the year? Yeah.
I think the next decline in commodities, they've already had a crack from the enthusiasm in March, April. And I think the next leg down for commodities will begin to appear in September, and that then will bring down the rate of inflation eventually. But it all, the good lead on it, of course, are basic commodities on this, and then you go from commodities to the producer price index, and then you go from, that used to be called wholesale prices, and then you go to retail prices. So, but the issue is central bankers who really don't know what they're doing. Now, there are other parts of the question.
Are you expecting the Fed will succeed in bringing inflation back down to the 3% range? I know that the Bank of Canada goal is 2%.
I gotta say no to that, because those guys, as I said, don't know what they're doing. Market forces, well, after every great financial bubble, the feature has been deflation of most asset prices. So that's things plus financial assets, and hell, this thing's going to go down to minus 3%, let alone down to 3%. But give it a year or so, and of course the break could start after September. And then the other question will be a recession.
Yeah, will there be a recession? And maybe that's just the same thing to the central bankers.
Oh yeah. Questioner, yeah, you've got that one right on. That it's market forces that are just going to take everything apart.
And what about Canada? Prices keep going up and up, even on food. It's very disturbing and infuriating, because all this was really predictable, but the government did it anyways. I always question people attacking the government, because this inflation problem isn't just jurisdictional. It's not just the U.S. and Canada. It's the entire world. And so far, we haven't had riots like they've had in Sri Lanka, where they overthrew the government, or riots like they're having in Argentina, where the inflation rate is 70%.
Yeah.
Yeah.
No, Jim. Every country has a central bank, and they've all got the same PhDs, and they all want to inflate credit and depreciate the currency. What varies is the business cycle as it comes and goes. And when you're on a boom, prices will go up, even if the central bank was responsible. But no, let's just go back. Most of the last decade, the Federal Reserve arbitrarily decided that inflation wasn't high enough. So they were unrelentingly easy with credit, not understanding that the world was in a great financial bubble. So it exacerbated the bubble. Now then we want to jump back to the 1920s. You had a huge commodity boom with the big wars then, and prices crashed. And then the Fed spent most of the 1920s arbitrarily deciding that inflation wasn't high enough, so they were deliberately easy, not understanding that a great financial boom was on. So the Fed is the chronic inflation over the last 100 years has been exceptional. You've only had 2 centuries in the past, the 1500s and the 3rd century in Rome, when you had this kind of deliberate government inflation. And it's ending action now. It's coming to an end, and I think the contraction will set up a political reform that will not just reform reckless governments, but will reform reckless central bankers as well. So, fascinating times.
The question goes on to say NDP leader Jagmeet Singh actually suggests giving people $1,000 in free money to help pay expenses. This is something so stupid and grossly criminal it staggers the imagination. It's scary that politicians still have this mindset with people's money.
Oh, I agree. I couldn't write it any better myself. So the problem is too much currency and credit pushing prices up. And so they're now going to add more money into the hands of public. They are obviously mad. But hey, this is a good set of questions. Thanks a lot.
Now, we go overseas to our friend Bert. And Bert asks, well, he actually states here, Bob is an outstanding market historian and also a geologist. And my question is this time about geology. It seems that Uganda has huge new deposits of gold. Estimates are around 320,000 tons of pure gold. Now, that's more than a penny or two. That's more than all the gold that's been mined since the dawn of history. How likely is it that these figures are a correct representation of what's been found? The gold market didn't react to the news that came out in June. Thanks a lot. Please go on with the show. Kind regards, your friend Bert Winkenbach.
Yeah. Oh, yeah, that's a good one. It came out, as he said, in June. And, no, it's, I talked to some mining guys who were in the know and, at the time and checked it out. No, it's a highly improbable story. There are areas in Africa that have had gold deposits in alluvial, it was sort of like in soil, so to speak. But no, this one I think is just absolute garbage, improbable, and why it was cranked out, I have no idea. I didn't have the time to check and see if there's any specific stock with the story, but the outlook for the gold sector is that we're likely bottoming. We've seen signs of technical excesses on the downside, but it could take a month or so yet before the bottom is in on the golds, and then after that, golds would likely outperform the S&P. So looking forward to a new bull market for the gold sector.
We have a question from Sam here, Bob, that I just found. I guess it just came in. From Sam, Bob, if history is to teach investors a lesson in 2023 with rising interest, inflation, ridiculous stock valuations, war in Ukraine, tensions in China, a twilight zone political rationale, where do you believe the U.S. indices will be in the new year? Some are seeing that we're going to have a major correction like we did in 73, 74. Would you agree that we're repeating this cycle again?
Yeah, that's a good one. Yeah. In January, we noted the technical excesses in the U.S. stock market and also noted that January can see the peak of pretty impressive financial events, and cited examples like gold and silver in the crazy January of 1980, and also mentioned that in January 1973, the S&P set a big high, and then started the bear market, and that turned out to be the worst bear market since the 1930s. How do I know? I was there. So anyways, I have a friend who does the chart on this, and the overlay on the S&P now, this year, with that for what followed January 1973 is interesting, and that let's call it a model. It called for a rally into September, and then the next leg down. Okay, now this is sort of interesting, but the bigger picture is that a great financial bubble, number 6, with the first starting with the South Sea bubble in 1720, this has completed. And all 5 previous ones in London as the focal point and previous financial center, they peaked in May or June, dithered around in the summer, and then crashed in the fall. So the chances are that we could see a financial crisis, another phase of it appearing, maybe towards the end of September, but definitely in the fall. And this would then set a very severe bear market. So putting price targets on the S&P is a little early on that, but getting the direction is the key thing. And our advice since December, January was that investors and traders should build liquidity, because once the contraction started, it would be a liquidity problem, and those with liquidity get to be the winners. So that I think is, I think the way things are going in the last few weeks here, it looks to me like the financial markets could fail probably, well, let's just sort of say after September.
From Denis, this email: I'm a great fan of your show. I listen to it religiously every weekend. Bob has mentioned on many occasions that central banks always get it wrong when dealing with monetary policy by trying to manipulate the economy to avoid booms and busts. Can he describe his alternative to central banks, and how would that work?
Oh boy, now that's a thoughtful question. I've been thinking about it for a long time, and I think a central bank, you're never going to get rid of them. So then what is required is that the central bank be disciplined, and the best discipline has been gold convertibility, where the price of gold is fixed, and that's that. And the tout from the interventionist central bankers is that they need that a gold standard would constrict their ability to manage the economy. And their idea of managing the economy is to keep the recovery going and preventing recessions. And well, let's do a little bit on that one. When the original promoters behind the Federal Reserve understood that if you had a financial crisis, it would be followed by a recession. So the theory with the Fed is that as lender of last resort, it would prevent the financial crises that led to recessions, and therefore there'd be no more recessions. There has been 19 since the Fed opened the door for business in 2014. So the theory doesn't work, and yet you can't get rid of it. So you can't get rid of central banking, but you can discipline it. And what a gold standard does is limit the ability of the crazed central bankers with their notion that they can manage the economy. So the gold standard, in effect, manages the ambition of central bankers, and that, I believe, will happen with the political reform that is well underway, and with a recession and contraction that will push the reform movement even further. And at some point, ordinary people are going to look at the disaster and say, hey, you guys, you spent trillions of our tax dollars on promises that you could prevent bad things from happening, and so Yep. Central banking, unfortunately, will remain, but fortunately will be put on gold standard.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, some of the headlines that caught your eye today. German power prices hit record highs as energy crisis worsens.
Oh, yeah. It was even foolish at the time because in the 1980s, Ronald Reagan, as president, advised Europe not to rely upon Russia for oil and gas. Just said it's too risky. And then that risk is now apparent. Now, the other one is that they all went crazy for alternative energy sources, windmills and solar cells, which are intermittent. And they were shutting down nuclear power and coal and all that sort of stuff. But fortunately, there's still coal plants around where they can revive those. But the Northern Europeans are getting a very stern instruction on practical supplies of energy. And that sector will be reformed in Europe. It just has to be. Otherwise, they got no energy.
Headline: record number of home buyers walk away from contracts as builders have problem with a glut of unsold houses.
Yeah, remember that back after 2006 when the property market went bad and they would, what was it? Something about just leaving the keys.
Yeah.
And walking because the value of the property was less than the mortgage they owed. So they just walked, and here we are. It's happening again. And the trouble with that one is it leaves a lot of builders stuck. So you can see how it feeds upon itself until it eventually clears.
In Moose Jaw back in 1981, a similar thing happened when mortgage rates hit 21%. You could see how unaffordable that is. And there was a housing development. The contractor couldn't sell his newly built home, so he drove a bulldozer through 3 of them. The problem is in the 4th house, his wife was in the kitchen. He refused to stop bulldozing the house until the police put a warning shot through the window of the bulldozer.
Oh my God, that's going mad. Isn't that?
Yeah.
Isn't that a tragedy?
Right. And then for weeks, people from all over Saskatchewan had to drive through the suburb to take a look at the damaged houses, and the bulldozer parked in the middle of one with the bullet hole in the window.
Good grief, that's a story.
Now that is. Talk about disaster tourism. Now, China home prices have fallen for the 4th straight month as mortgage crisis deepens. How bad is it behind the bamboo curtain?
Oh, it's bad. Actually, it was 11 months.
11 months.
Yeah, there it is. And also, I remember reading something recently here that where people were buying their condominiums or apartments, they had to pay up front a whole lot for them, and yet they weren't completed. So they have yet to move in, and yet they're owing money, and probably the property values are coming. And then you got the other problem in China, where they have hundreds of apartment towers.
Millions. Tens of millions.
And empty.
Yeah. Tens of millions of empty apartments.
Yeah.
I think the figure that we had some time ago, I'm just doing this off the top of my mind, something like 90 million vacant apartments.
Yeah. I think you've mentioned that one.
Yeah.
Tim, yeah. Mm-hmm.
And that was from a friend of the show, Danielle Park.
Oh, yeah. Yeah.
Now, so, again, China still has those empty cities. And now those empty cities were built such a long time ago. The buildings they put up are already falling down. So even if you wanted to move into them.
Yeah, empty ones they fall apart. You can't, a building has to be maintained. Yep. No, it's,
Well, now the reason I find this troubling, Bob, and why China might be making noises about Taiwan is traditionally countries, when they're in economic trouble, to take the minds of their citizens off it, like to get involved in conflicts. And I think the classic of that would be Argentina invading the Falklands back in the early 80s.
Yeah, no, that's always, let's have a war to distract the people.
Yeah.
But I've actually just started writing an article on that, Jim, and the conclusion is that if this fall it really goes into severe contraction, the whole thing could happen fast enough that China runs out of money so quickly that they can't intrude in Taiwan, and also that would affect Russia as well. They're probably out of money right now. And they would then, Russia would end its intrusion into Ukraine. It's possible. But it's also, in China's case, that they would use Taiwan as a diversion. But I'm hoping that it happens fast enough that they get broke so quickly that the diversion of Taiwan, they can't afford it. It's possible. Who knows?
Well, when you have despots in charge, you know they can do desperate things.
Are you getting your instruction from Ottawa on that?
Well, first of all, the Prime Minister's on holiday somewhere. I was just watching a horrible thing on the national news where every city in Canada is short of ambulance drivers, of ambulances, of dispatchers, because emergency rooms are closed, and it's all because they're underfunded. The provinces say they're tapped out. Ottawa used to fund 50% of health care. Now it's down to 22. I think the solution's obvious, but not to the people who live next to the Rideau Canal. Mm-hmm. Yeah. Bob, always
the
fun.
Ambulance drivers, Jim, it prompts a story from the way back when I was sharing office space with some guys who were managing money. And one of their accounts was the ambulance drivers' pension fund. Mm-hmm. So I had my desk there, and I had a chart, a history of price of something, up and down, a long chart. when the ambulance drivers guys would come in every once in a while, and so they were friendly, and they knew us, and he looked at this chart up and down. He says, "Oh, I don't know about that one, but that patient's not going to make it."
Bob, always fun chatting with you.
Yeah, okay, we look forward to next week.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. He was speaking to us from Vancouver. If you have any questions for Bob or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.